Okay. We're just coming into this meeting. Dan, can you hear me?
Yep.
Good. To all the guests that are starting to come in, thanks for joining us today. This is a special occasion. I'm excited about it. And anyone who knows Dan Ives, and a lot of people do, from CNBC to Wall Street Journal or Barron's, any kind of media publication covering growth opportunities and technology, Dan Ives is the source, the resource to go to. So I just want to lay the groundwork and introductions today. All of you know me. My name's Jeff Runyon. I have Runyon Capital Advisors. Runyon Capital Advisors is an office that I launched in Beverly Hills more than a decade ago. And we trade through and hold custody all assets with Wedbush Securities. Wedbush is a bigger broker-dealer firm, one of the largest west of the Mississippi and a New York Stock Exchange member. And we're fortunate because Wedbush has a lot of depth that we have access to incredible analysts. And today, Dan is going to be a special presenter who will talk about what this event's really titled, The Next 10 Years. So Dan, if I can, I'm just going to give you a flattering background. You did it, so I get to color it. Dan is especially recognized and known as a managing director and a senior equity research analyst covering technology with Wedbush. And he's covered this space on Wall Street for 2 decades, especially software and the broader technology sector. So before having launched into that part of his career, he was a financial analyst with HBO, which is interesting as it'll relate to conversation today, and then received an MBA in finance before becoming a really well-known resource in technology. Dan is a highly sought-after speaker, and it is true that you've been on a variety of publications and networks from CNBC and Bloomberg to BBC, ABC, CNN, Fox, and many others. To be quoted in Investors Business Daily, the Wall Street Journal, and all these other sources makes it especially a privilege for us to be able to share your knowledge with many of our clients from Florida to California and across the country where you are, even New York, New Jersey. So Dan, thanks for joining me.
Thanks for having me.
That's about all I'm going to say today.
Great.
Really, to everyone that's listening in, Dan has a funny way about him, a lot of energy and a lot of enthusiasm. So as soon as this meeting ends, I feel like some of you are going to call me and say, hey, Jeff, we should buy right now what exactly he said. And maybe we should, or maybe we should just pay super close attention, whether it's today or tomorrow or a week from now that we place a position in a portfolio. I don't want you to leave this meeting and immediately execute trades or start placing trades immediately following it. Let's start to lay the groundwork because, as you know, an investment is really something that takes time and patience. And the old virtue or motto, patience is a virtue, is important to understand. So Dan, if you would, take us into from where we are in 2020, in a landscape that we never would have imagined entering, what do you think are sort of the immediate growth postures that a person could expect to see in the periods ahead?
Yeah, and thanks everyone for joining. We really appreciate it. So, and look, and I tell you, in 20 years of covering the tech sector, and I've seen, from the dot-com bubble and burst to where we are today, in my opinion, it's some of the most transformational trends that I've ever seen is what's happening today. I'd start with, what I believe is really going to be a paradigm changer in terms of cloud computing. I mean, even if you think about this COVID-19 environment, and we'll get into it more, there's only about 30% of workloads on the cloud today. That means enterprises only have about a third of applications and data on the cloud. And even on the consumer side, that's just early on in terms of starting, whether it's Netflix on streaming or video or even accessing your online banking. And that's going to be a massive acceleration. And I think if you look at this remote from home, workforce, that's really going to accelerate this cloud theme. We'll talk about some names and trends that really benefit. And that, when you look at cloud, that really covers on the enterprise as well as on the consumer side. And then there's some other just massive trends that I think are really going to define the landscape. When you look at areas such as EV, in terms of the EV market, you look at obviously someone like Tesla in terms of where they are, as well as areas such as streaming and some other core tech themes where there's a core group of names and themes that I think are going to be playing out over the coming years. And my goal is for everyone to leave here with not just high level themes, but names, whether it's near term or long term, and how to play those.
Maybe if you would, we have a lot of sophisticated investors on this call, and we have retail users who already experience and use the cloud. But can you just talk about simply when you use an acronym like EV so that everyone's on the same page, what you're referring to, and the cloud, how someone who might not think they're engaged in the cloud already be using it?
Yeah, so let's first start with the cloud, and let's break it out between enterprise and consumer. On enterprise, the two behemoths that have really built the cloud, it's Amazon on AWS and Microsoft on Azure. And what that really means is if you go back even 5, 7, 10 years, companies had their data that existed on a server or on boxes that resided at the corporate either headquarters or in some branch office. What started to happen is that over the last 5 to 7 years, more data has moved to the cloud, to a virtual environment, whether that's applications, data that you're accessing, depending on the industry, could even be healthcare in terms of hospitals where they're accessing data. Now with that also has security concerns, which we'll get into, and that's really spawned what I view as a whole new phase of cybersecurity spend. So from an enterprise perspective, about a third of the workloads that you access as an employee are in the cloud, which means data resides virtually. On the consumer side, that's across the board. I mean, whether it's a Netflix, streaming, gaming, whether you're accessing online banking, more and more when you're looking at Square and any time online sort of platforms, that's in the cloud. And that's why we believe about $1 trillion is going to be spent in the cloud over the next decade, just a massive amount of spending. And I think there's a handful of players that benefit from that, which are some of our top names, not just over the next 6 months, but over the next 2, 3, 5 years. When we talk about EV, electronic vehicles, electric vehicles, obviously Tesla being the main one today that really has dominant market share in the EV market. But you look at areas like GM, Ford, some other core US manufacturers, as well as there's a whole supply chain that's really going to benefit through the EV market. And, I think in California sometimes you get a warped perception, or some other states, in terms of how big EV is. I mean, EV is 3% of vehicles worldwide. So when I start to hit on some of the trends, a third, 33% of workloads are in the cloud today. Just to give you an example, we think that's going to 55% in the next 2 years.
From 3% to 55%
so
in
it's
2
going
years?
from 33% to 55%
A third, yes.
in the next 2. Then you look at EV. We think EV goes from 3% to 10% in the next 4 years, with China a huge beneficiary of that. And there's some domestic players there, and some ADR ways to play it as well. So when you look at cloud and EV, those really from a high level are obviously themes that many consumers are, either touch, whether from a consumer perspective or even from an enterprise.
And of course, when a listener hears 3% to 10%, those numbers may sound small, but it's the rate of growth from 3 to 10 is more than a 300% increase that you're trying to highlight as the real opportunity.
Yeah, and that's even something, if we look back at the last 10 weeks in this pandemic, and you could a lot of tech stocks that are hitting all-time highs. Many investors, even institutional, there's a big debate why these stocks continue to move up. It's because there's a lack of secular growth stories in this market. many of them reside in tech. Now you can say some are exposed to, we call it about some of the work from home themes and, telehealth and some other areas, but a lot of it comes down to tech. So there's a continued re-rating of these stocks because there's a lack of secular growth stories. And I think this COVID environment has almost accelerated that trend. And when you look out in the next 3, 5, 10 years, these are not trends that are just going to go away in the next 1 to 2 years. We're only in the second, third inning of these trends playing out, in my opinion.
So what does that look like? The market had a massive pullback earlier in the year. We've regained a lot of what was lost. People wonder, is it time to get back in? Is it too soon? Does the market move the other way? I know you're an analyst, so you're looking at big picture going forward, but how do you help a person sort of answer that question?
Yeah, I mean, like our opinion overall in tech, that we think tech names move up another 20, 25% from here to year end. And the reason I say that is that near term, we could talk about snapback rally going into 3Q and 4Q from a demand perspective. But the bigger thing, especially when you look at areas like cloud, these are secular themes that are being accelerated. And I think when you look at the next 12 to 18 months, I mean, I'll give you an example. Like you look at, let's say, you go to cloud, talk about that 33% going to 55%. So what are some derivative areas of spending? You have to protect those workloads. You have to protect now even a remote workforce, work from home. There's companies like Zscaler, ZS, which is one of our top cybersecurity names. CrowdStrike is another one. CyberArk, as well as even an incumbent name like a Palo Alto. Because when you look at cybersecurity, I mean, look, you have 35 to 40 public cybersecurity names, but there's a finite group of them, call it 8 to 10, that protect the cloud. So when you look at the cloud theme, it's not just Alibaba in China, Google, Amazon, Microsoft, Workday, Salesforce. There's a huge ripple effect across the board, and I think it's important as an investor to have exposure to all different facets of this cloud build out, not just the 3 to 4 large cap plays.
Okay. That sounds good and makes sense, both the consumer side of it and clearly the enterprise space. You started to mention EV. We're in California, or at least I'm in California, and we see tons of electric vehicles. Tesla is obviously the dominant player in the space, but even Volvo, Porsche, every manufacturer is coming out with something in order to be competitive there. Talk a little bit about what that means, not if it's just Tesla, but also just this sort of global shift that's occurring right there, that space.
Yeah, I mean, I talk about the 3% in terms of worldwide. In China, it's about 4.9% in terms of EV. And look, you're seeing it. I mean, and obviously Tesla's a name we followed for many years, and we often visit their factory, both Giga as well as in Fremont. They own EV today. Now there was thoughts that rising competition was going to be a big issue for Tesla going forward, but it all comes down to battery technology and brand, and that's something that Musk and Tesla has continued to accelerate versus competitors. I mean, even today, we raised our price target and went to a bull case of $13.50 on the stock, which, in my opinion, Tesla is a pure play, public play. No different than Microsoft and cloud is the best way to play EV. Mm-hmm. But I do believe if you look at like GM and some of the traditional Detroit 3, they're doing some significant things when it comes to EV, and they're really betting the landscape on EV over the next 3 to 4 years. A lot of it's going to be around battery technology. If you look today, and I think Tesla's going to come out with some innovations over the coming 3 to 6 months, but this is something to pay attention to, not just in the US, but especially in China. Because what I would focus on in China, there's a lot of domestic plays in China, and even ways to play it through ADRs, because I do think from an EV perspective, you don't just want to play US and Europe, because US, with tax credits that have basically, they're not there anymore because they exhausted them. A lot of the growth, let's say when you're looking for Tesla, is going to come out of China. And domestic competition is going to continue to increase. So I think when you want to play that theme, Tesla is some of the pure play, and of course, some of the traditional automakers, but also especially in China and even in Europe, as we've seen with some pretty good innovation there as well.
And the EV doesn't just stop at being electric. It's the idea of an automated driver, and that's Waymo, Alphabet, everybody, not everyone, but companies are trying to participate in that space so that you not only have an electric vehicle, but one that I don't even have to drive if I get in it.
Yeah, full self-driving. We've done some test driving of some of those vehicles. And look, right now, Waymo continues to be ahead of Tesla. I mean, if I kind of rank them, it is Waymo, which is one of the moonshot projects of Alphabet. Of course, Tesla, and then Uber. I mean, Uber I'd put them third or fourth in terms of the technology from FSD or, full self-driving. And that's also, look, when you look at, call it ride sharing, I can tell you from an institutional perspective, like one of the big growth areas when you look at, you talk about 10 years, because I do think you got to look out, when you look at self-driving, that's probably one of the most innovative technologies that I think is real as we look out from once it gets through regulatory. We believe by 2025, we're going to start to see not just on the driving, but also more trucks, because trucks, you've already seen, some routes that have gone full cross country and on some test drives, but self-driving is going to be important. That's going to be an area that a lot of the core technology stalwarts are going to heavily invest in. Because even when you look at ride sharing, I mean, Uber, a third to 40% of their fleet, probably 7-8 years from now, is self-driving. I mean, that's really the goal for Dara and Uber.
That's not that far off.
Well, it's not. And that's why I think it's important, and I want everyone to leave here with, there's trends that are near term over the next 12 to 18 months. Then there's trends that are longer term. And I think you have to almost separate them. I mean, I put that in more of a bucket of a moonshot, something that I think is real and something that's a trend to be extremely aware of. And then, of course, there's near-term trends that are going to accelerate, as we talk about with cloud and cybersecurity and even telehealth and some other areas.
Telehealth is an interesting issue to raise, especially given the pandemic. A number of physicians, doctors, even regularly scheduled appointments that a patient might have been requested by the physician's office to occur by a conversation like you and I are having. You mentioned, go ahead.
No, you look at telehealth. I mean, as you're talking about, like, there's a company called Nuance, NUAN's the ticker. I mean, they are, in my opinion, probably one of the more pure play ways to play telehealth. I mean, they're partnering with Microsoft. They have ACI, these analytics, and some other sort of next gen initiatives. But where we're going, I mean, telehealth's going to be significant. And part of why that's been one of our favorite, we'll call longer term growth stocks, is because of telehealth. And I think there's shifting dynamics. And then also you look at Microsoft. I mean, Microsoft's heavily investing in telehealth. And when you look at telehealth, you also have to think about, there's hospitals and healthcare spend, but who's facilitating that transaction? Who are the vendors exposed to that? And I think throughout healthcare, there's a number of plays that play into that, but none, in my opinion, better than Nuance is what I would view as a core, almost telehealth play.
So it's another example, though, of how it takes a long time before you have the adoption of a technology. So I have clients who are physicians or doctors, and it makes sense how you bring together a patient and a physician by a virtual communique. But the reality is, sometimes people say, hey, no, I want the doctor to see, touch, feel, so I know what's really happening, that this may just be an increase in profitability for a doctor's office. Can you address that?
Mm-hmm. And that's something that, many healthcare companies on the private side that we work with many physicians as well as hospitals. I think also what you're starting to see is, telehealth is going to be something that's, especially over the next 12, 18, 24 months, more and more consumers are going to become comfortable with. But a lot of that, when you look at telehealth, it's data driven. I mean, it's going to, and when you think about the data-driven nature of telehealth, I mean, going back to cloud, I think about 10% of overall cloud spend is going to be healthcare driven. Big reason that is telehealth. I mean, you're accessing data, and of course there's HIPAA laws and different regulatory, but you're constantly accessing it. And that really is something that cannot be done without, underlying technology that facilitates that. But it's going to be a quagmire for, I think, many healthcare, hospitals, physicians going forward in terms of the telehealth versus face-to-face medicine. And I think that's something where, from a technology perspective, there's many companies that are going to be facilitating these shifts.
So let me ask you, Dan, if you could hear all the participants ask questions, they want to know, like, where do you go? Where's your first best pick, best play right now? And before you answer that question, I want to remind everyone, an investment takes time, right? So I mentioned this at the beginning of the call. And, I'm born and raised in Missouri. I come from a background where my family had farms in Kansas, and we still do. And my grandfather would go and make sure the land was cared for, that it's free of weeds. And he never planted seed and came back in the morning expecting to see the growth. You have to irrigate, have some sunshine and some time before it takes hold, takes root, and you have real growth. Sometimes I just want to remind investors, if we have an idea right now, there's a lot of movement along the way with the stock price, but that could be the real opportunity for the future. So
sure,
some of these technologies, they're going to fluctuate more so than other positions. But if they were asking you directly, what do you love? What do you want to own right now?
Yeah, so to me, I would put it in 3 buckets. The first bucket are the ones where they have cloud exposure. I think there's stocks that are still have significant upside because they have some of the secular growth. And I think you have to view it like a basket, because to kind of, to your point, there's stocks that could be volatile, but I think there's a basket way to play. First, when I talk about the cloud trend, I look at my favorite large cap, and there's really been the last decade, continues to be Microsoft. Man, I think Microsoft is a $200 to $250 stock when we look out over the next 12 to 18 months. And there's been more and more share gains versus AWS. That's a re-rating stock. I think on a sum of the parts, that's one where cloud is still being recognized among investors, and that's part of what you've seen playing out. So Microsoft is our large cap, continues to be favorite way. And then when you look at,
and a lot of times, just to build on that, a lot of times people aren't thinking about Microsoft being the next growth opportunity when Microsoft is really sort of born about 40 years ago.
Well, and Microsoft has been a name that many investors, both institutional as well as on the retail, has missed.
Yeah.
Because a lot of it is that, okay, a third of revenues comes from PCs. The valuation, PCs represents 2 to 5%. Xbox, maybe another 1 to 2. Cloud's 80 and 90% of the story. And you only have 15% of Microsoft's install base that moved to cloud. That's why this continues to be a re-rating story. A company that's grown double digits. And even if you look at in COVID, it's something that's almost been accelerated in terms of the spend. So that's why, from a large cap perspective, of course, from a FANG name, I continue to view, of course, Amazon's extremely well positioned as a stock that's going to continue to move up. But I think Microsoft as a core cloud play continues to be there.
Many of our listeners know FANG, but the acronym Facebook, Amazon, Alphabet, Netflix, Google, those are the ones that you're referring to.
Yeah, and overall, we've talked. We think FANG names are up another 20 to 25% this year. And it's one like, as we've navigated investors, we'll call it our COVID-19 playbook. Part then was you own FANG. They're going to continue to lead the market higher because just take a step back on the trends. Streaming, Netflix, they continue to own the market. Even obviously HBO gets launched today. You have Peacock, Apple, many others. Disney obviously being the most predominant. But from a share perspective, they're going to continue to win. Amazon's an e-commerce cloud play, both secular tailwinds. Facebook, in terms of social media and engagement and advertising, continues to see an uptrend along with Google. So that's when you kind of put those together. And of course, the best of the bunch, along with Amazon and Apple, those are ones that are trends that continue to go higher. And Apple's a good example. You talk about a stock that's about 315, 320 today. iPhone units have come down 30% since COVID started. So to many investors, like, okay, why is the stock move higher? I'll just give you numbers. There's 925 million iPhones worldwide. 350 million of those have not upgraded their phones in 3.5 years. That's all you need to know. Pent-up demand's there. iPhone 12, 5G comes out. China, despite the negative we'll call it negative US-China tensions and maybe some of the perceived headwinds, 60 to 70 million of those iPhones are in China. You do a sum of the parts on Apple. We believe the services business is worth 500 to 600 billion alone. Services being recurring, whether that's App Store, cloud, Apple Pay, Apple Music. That's a $50 billion plus revenue stream. So what's happened in Apple, there's a pent-up demand story. You're getting there. And then you have the services business that's been a huge part of the sum of the parts. That's why I think sum of the parts Apple is a $400 plus stock.
Okay.
Just all good examples of when you hit some of the large cap plays. And then to me, there's some very compelling, what I'll call, not the typical work from home. Work from home, look, if I went to Starbucks after this and I said, who's a work from home? The barista would be like Zoom, Slack, Citrix. Okay. And I think a lot of that's played out. But then there's companies like DocuSign. Just very simply, they do e-signature. In a remote workforce, how are companies doing signature? No one's working in an office. E-signature has actually been, we believe that's an $8 to $10 billion market. That's only 2% penetrated. They own the market. That's DocuSign. That's why that stock, in my opinion, it's a, call it 150, 120. That could be $150, $160 stock just as we look at the next 3 to 6 months. Mm-hmm. Then you look to the second bucket. Okay, there's cloud. How do you protect those workloads? That's where I look at names like Zscaler, CyberArk, Palo Alto, SailPoint, CrowdStrike. But there's a basket. There's a basket of 6 to 8 names that are cloud exposed security ways to protect that. And I think you have to view the themes when we talk about next gen. Cloud, there's a cyber security theme. And then to me, I think another key theme that we're seeing play out is, derivative as more call centers move to cloud, as more consumers move to cloud. There's companies like NICE Systems, NICE. There's our favorite healthcare cloud play, which is Nuance, NUAN. And then a name we love is this CRNC, Cerence. You talk about next gen, that's a next gen auto software company. So as more and more companies from an OEM perspective are building next gen technology into automobiles, Cerence is a good example of one. And that's also one that I like because you play an economic rebound over the next 3 to 6 months. I think we could look longer term, but I think you also want to be exposed. We could say some defensive, but you want offensive ways to play a rebound. And I think a lot of these stocks re-rate higher, in my opinion. I can tell you from an institutional perspective, many investors that I've known for over 2 decades, I think institutionally, hedge funds, mutual funds, they were maybe at first, wary of the rally, more negative, more bearish. Now you're seeing a huge catch up.
Yeah.
And I think it's just important to understand some of those dynamics.
Let me ask you a question. You use the language next gen technology. A lot of times when you read the Wall Street Journal or any publication that might be addressing next gen technology, a person might come to think about 5G as it relates to how they have access on their phones. Can you talk about that part of the sort of space and world?
Mm-hmm.
And if you would, you mentioned Apple, but it's not just the phone itself. It's like all the internal components that go along with it. Are there any companies that are contributors to making that product its final piece that you think merit consideration as well?
Sure. Yeah, and we could get into the semi piece as well. So first 5G, and I look, there's a lot of times there's technologies that have hype, others where it's real. 5G is one we'll be talking about for the next decade. No different than you talk about like self-driving and some other technologies. Look, 5G is one where the technology is going to be there for consumers ahead of the actual application and use cases that will be coming over the next 1, 2, 3, 4 years. 5G is a paradigm changer. Forget just smart cities and some of the more visionary ways that 5G is going to be built. It's something that's really, it's going to be a huge ripple effect, but the first beneficiary is going to be anyone that plays into that telecommunication landscape. Of course, there's AT&T and Verizon, some of the carriers, but especially when you look at, to me, it's the Samsungs, the Apples, the core smartphone makers, and of course many in China that are going to benefit as well. Look, and also 5G is one of the reasons why it's so contentious between US and China. Because just going back, China is well ahead of us in 5G technology. Just to simplistically put it, I view it maybe 6, 12, 18 months ahead. When you saw the Broadcom Qualcomm acquisition that was blocked due to security reasons by the government, that was the first shot across the bow, because there's a recognition 5G is something where this is not going to be a 1-2 year thing. And our best bet of 5G is Qualcomm. So that's why when you talk about and Qualcomm fits very well into Apple in terms of semiconductors. Another name would be NVIDIA. A name that I think from a semi perspective, along with Intel and Broadcom, continue to be ways to play, not just Apple and 5G, and of course there's many suppliers, but the whole ripple effect of what we're going to see on this upgrade cycle. And that's why something like a Wedbush that we do a lot, and I do with a lot of my colleagues, we do a lot of Asia checks, go to Asia many times, obviously not in this environment, although I actually was there in late January when this was all kind of breaking. And I think it's a good example of you got to be on the ground to understand the winners, the supply chain, who's going to benefit. And I think there's going to be a massive ripple effect from 5G, not just for Apple, but as you talked about, many component players that play into that ecosystem and food chain.
So when you talk about the 3 different buckets, take us through each of those 3 again. And if you would just top off the couple of names that you included, like Nuance, with Cloud, Microsoft, just run us through that. And then let's push through into whatever feels like the next part of what we should be addressing for next sort of gen growth. Technology it's always in stages, and where we come to know about it. There's an introductory stage where sort of it's at its very birth and it's just starting to occur, where it's still being built. And there are some early adopters, but then you get into a beta phase where it's really getting into launch. So, people obviously are really familiar with their phones. 5G technology makes sense. Everyone wants their data a little bit faster. EV, they understand, they may already own cars, but what's next? What's like the piece that may be coming that no one's really thinking about?
Sure. So first, in terms of buckets, to put it really simply, like you have to have a cloud bucket. from your large cap plays like a Microsoft to some of the work from home names to what I view as almost the stack that facilitates that. And that's why those names, especially, DocuSign and Microsoft, continue to kind of be those core names that I think play that theme. Who protects those? It's cybersecurity. Because as you see those workloads move into the cloud, you need to protect those themes. And that's where what I view as almost a basket of cybersecurity plays. And then the third bucket is what I view as derivative plays around cloud. Call centers moving to cloud. Telehealth, who's supporting cloud. We're talking about names like Nuance. There's also call center names like 5988. Talked about, nice systems as well. Whereas I think those are kind of buckets that play there. But then to kind of put it in a bow, you have to have the large cap exposure where I believe FANG names continue to fit. And I think anytime these stocks sell off on regulatory, on China concerns, maybe a new entrant like a Disney or others, there are opportunities and ways to play it. And I think as a technology portfolio, and I'll kind of hit on your last point, I think you have to be exposed to the trends over the next 6, 12, 18 months. And of course, Apple hits on that 5G trend. But then on the other side, when you look at the next 4, 5, 6, 7 years, I think probably one of the biggest technologies that we're not necessarily talking about, but I think we're going to be talking a lot more about if we sit here 2, 3 years from now is going to be self-driving. I think that's something where, as myself, who I've spent a lot of time on Tesla's campus, and I've seen what Waymo and I've seen some of the other competitors have, that's a lot. The technology is a lot quicker coming at us than I think many investors realize. And I think when you look at Google and Waymo, that's going to be a big piece. And I think, look, another thing that you're seeing, even on ride sharing plays, I also think from an investor perspective, these ride sharing names, specifically Uber, it has exposure to some of those trends like self-driving down the road, which is a huge part of their initiatives, but also it's a new landscape in terms of the gig economy and in terms of food delivery. And as much as ride sharing is under massive pressure today, I think it's a new paradigm. I mean, New York Stock Exchange employees can't go to work if they use mass transportation. How are they going to work? Either they're driving or they're taking Uber and Lyfts. So I do
the autonomy piece is what I was sort of thinking about. I talked to you in a variety of different conversations, but one of them is sort of the autonomy wave that's predicted even from now through the 2030s, with like the idea of these Amazon Go stores that are really automated with a cashierless system, and that they anticipate even as soon as 2021 to have something like 3,000 of these stores in place.
Yeah, and one thing, for anyone that we did a lot of digging, and we do some deep dive reports sometimes, every few months. And one that we did was on autonomous. And that's something, if anyone wants one of those after, just to email, you or myself. I think there's a lot of good information there. But to your point, like a lot of this, if you look what Amazon's doing and you look what's happening across consumer, and you're going to see more autonomy, more robotics, and robotics is another area. That's going to be a huge area of investment. And when you look at a lot of the large players, these are some of their biggest investments. We'll call them moonshot projects, but they're significant because they're not just ones that are margin accretive over time. It's about efficiency. And I think it's something where we're seeing that trend across the board, whether it's on the consumer side or even on the enterprise side.
And there's a byproduct to that too, that wave of autonomy. It creates an environment where we have young people that are coming out of college or they've been educated, but we have to have a reskilling where people start to have a better understanding and upscaling of a human sort of digital sophistication. My kids can do more than me. I could do more than my parents with tech, but there's going to have to be some new wave of understanding and working with this technology, because a cashierless store only works as long as somebody who understands technology well enough can put it in place to make everything operate sort of seamlessly.
Yeah, and I think that's even why when you look at like on the e-finance side with Square and many of the other companies coming around, I think there's huge technology advancements that we've seen in the Valley as well as coming out of Israel in terms of both private and public. I mean, even PayPal and some of the initiatives that they're doing, that's what, when you talk about the landscape, and even for, a lot of times I'll go to colleges or talk to students and different, speeches and stuff. A big area is like, it's about the next gen technology. It's about digital transformation. That's why you see so many individuals that are coming out of college, they're just in the early stages of what's going to be a 10, 20, 30-year cycle in terms of a lot of the companies that are facilitating it. And I think it's something where it's not just on the come. It's not something that's 5, 10 years out. I mean, these are technologies that are being deployed more and more in this environment. And I think it's important from an investor perspective to differentiate between technologies also that are commercial and you can make money on versus ones where they're so cool. I mean, I've been to CES every year the last 20 years. There's how many times there'll be different types of innovations. I'm like, that is unbelievable.
Right,
but how do you
augmented reality, virtual reality? What do you
AR, VR? Yeah, I mean, that's a good example. Like, I'm not as bullish on like AR, VR. As great and as cool, super expensive headsets, commercialization of it's been difficult. And ultimately that's something where on the Facebook side with Oculus, as well as even on Apple, that's been very slow moving. Whereas when you look at other areas, as some that we're talking about, those are fast tracked and those are much more easily to be monetized. And that's also why even as companies come out, whether they're private or they come out public, I think it's very important to understand the monetization capabilities of a lot of these platforms. And I think you're going to see a lot of new companies coming out over the next 6, 12, 18 months. And also I think in this COVID environment, you're seeing private companies, a lot of down rounds. You'll see a lot of consolidation that's going to come through. But I think that creates both opportunities and challenges for some of the companies that play in it. But just to your last point, that's also why when you think from an investing perspective, talk about cloud, talk about exposure. But you also have to have that e-finance exposure in terms of Square and PayPal and some of the other ways to kind of play that, because that's a key piece of the overall puzzle.
So let me ask you, I hadn't planned on really addressing specifically, but people after this call, they will ask me, how do we get exposure to what Dan was talking about? Mm-hmm. You and I had a conversation probably September of last year about doing an event where we could talk about growth in front of my clients, which is happening right now, and I appreciate it. At the time, nothing like IVES, the ticker symbol, existed. But since that conversation to today, that has been created. Will you just give a brief cursory introduction of what that is and how it might sort of help fill a void in a portfolio for someone who wants to have this kind of exposure?
Sure. I mean, it kind of sums up a lot of what we're talking about. I mean, I could tell you, like I said, in 20 years, the most transformational technology trend that I've ever seen is cloud. The cloud transformation. And, Wedbush, my firm, as well as with ETFMG, which is, one of the biggest ETF players in the country, we kind of came together and said, look, we really want to build a cloud ETF that goes after what I've been talking about in terms of that opportunity. There's many cloud ETFs out there, but if you look at many of the exposure, it's an Alibaba, it's Microsoft, very heavily large cap weighted, where I wanted to focus on the stack, the hearts and lungs of the cloud ecosystem. So over the last year, and it just got launched, going back to early April, we built the what's called the Ives Cloud ETF, along with ETFMG and Wedbush. And what this really does, it goes after the $1 trillion it spend but it's a SMID cap global.
And SMID is just
50%.
small and mid cap, just sort of that blended
It's
round.
SMID cap. And I think that's important because you want large cap exposure. But I believe that in talking to so many institutional investors and doing my research for the last 20 years, there was an opportunity, a vehicle to capture this area of spend. And many times, like I'll be doing different, investor things or different seminars. Investors ask, how do you have exposure to the cloud theme? And I give individual names, as we talked about. Really wanted to build a vehicle, a way to play it. And that's really what the Ives ETF is. It's been super exciting in terms of launch. And when you look at the COVID-19 environment, it accelerates those trends. And more investors are looking for exposure instead of just a one-off name here and there. And there's 48 names in there, 50% international. It's mid cap, a good level of exposure from a growth perspective. And it hits at a lot of the trends we're talking about.
How often does the portfolio turnover change?
Yeah, so every quarter, there's a quarterly analysis. It could be some names either through IPOs, could be added, or maybe they could be sold. It's a quarterly viewed every quarter. But from a turnover perspective, I think the important thing in terms of this ETF is that it goes after not necessarily the applications, going after the infrastructure, the companies that facilitate that, not just in the US, but globally. Mm-hmm. And that was the whole goal. And it's been great feedback because to some extent, we wanted to give investors the opportunity not just to focus on this piece of cloud, but this piece. Because when I talk about $1 trillion to spend, I think a big piece of that infrastructure is going to be on a lot of these names. And so we're super excited. It's been great reception since we launched.
That's great. Dan, I appreciate the time that you've taken to visit with us today. If there are any questions, I wasn't planning to take any questions. I don't even know if we'll necessarily make the tech work, but I've got Dan Ives on the line, so he can solve that. If you have any questions, you can submit them in the Q&A section at the bottom of the Zoom screen. If not, the other or final part I'd like to just have you touch on, is there anything that I should have asked that I haven't as it relates to this space? The next 10 years is a broad scope title. Could include everything from medical upgrades and sophistication of technology like 3D printing for bionic parts. I think that in Princeton, New Jersey, they're working on a bionic ear. They actually have one. I need to get that for maybe for myself, but my dad, so he can hear a wide range of frequencies. There are endless technologies that are sort of building, developing, coming out. But is there anything else that we should have addressed or asked while we had you on the line?
Yeah, I think just the one area we talked about, but just to really stress here is that I think when you look at EV, we're just hitting the tip of the iceberg in terms of what this broader could be. Today, Tesla is the primary way to play that. But I believe over the coming years, there's going to be more and more ways to play it, both from OEMs as well as through the supply chain and globally as well. And that's why it's a complicated landscape today, maybe to end it on with U.S.-China tensions. But my rule has always been, and this has been consistently, throughout my career, is to really use headline risk and nervousness to basically tune it out, focus on the trends, depending on your risk profile, and build out that portfolio. Because anytime you get these headlines, it's created the opportunity. Mm-hmm. And I think if you look at these themes, these are themes that are not going away in the next 3 to 6 months. And I think the one thing that I'd say in this COVID-19 environment, it's further highlighted and put a bright spotlight on some of these trends where many enterprises were caught flat-footed. So you're seeing a massive spending toward those areas.
One of the questions that sort of come up is The tech may have run up substantially in the recent 11-year bull market, which we've been in, which is obvious and true. And the question is more specific to timing. Do you feel like it's appropriate timing to buy now? Don't
Well,
shoot the messenger.
I do, but I do. And the thing is, this has been, no, I'll be the first one. I've always had a bullish tint. And it's something where, over the years, my view continues to be the secular trends are so definable today, where a lot of these companies, they've almost become internet staples, no different than food and water in terms of in the average life of a consumer enterprise. And I think you're going to see more and more of that. And that's why the reason from a multiple perspective, I continue to view there's a re-rating happening on tech. And that re-rating is still, I believe we're only halfway, 3/4 of the way through this re-rating of the cycle. And that's why I think these secular growth names continue to work despite the volatility, because there's a scarcity of secular growth names. And we're talking about definable themes: cloud, streaming, semis, EV, ways to play it.
One more thing on streaming, and I know we're already at our time limit or close to it, but there seem like there are so many different streaming applications right now, and there's only so much market. Even if it's an enormous market, there's so much out there and so many dollars to be spent on discretionary expenditures. So you have Netflix and you have Disney Plus. Quibi's recently launched and they didn't have the sort of fanfare that they were hoping for given the COVID. What happens with all these different distribution platforms?
Well, I still think, and we've talked about it, on average, consumers are spending what's called a household $45 a month on streaming, anywhere from 40 to 45. We believe that can move up to 65 to 70. So just from a monthly service, there is room as the cord cutting phenomenon continues. But I do think, look, Disney, that's been a significant piece, and I think will continue because it is content driven. And I think you're going to see more consolidation, which is why you saw AT&T, Time Warner, and you've continued to see other acquisitions. And I think you're going to see more and more of it. No doubt, like a Quimby and some of the other ones, it's going to be hard for those, I think, to have massive success, just given YouTube in terms of free content, what we're seeing. But I do think like the price of content continues to go up. And that's why I think this is all trending to, I think Apple, when it's all said and done, Apple is going to either have to decide, do they want to be a tertiary player in streaming? Or if they really want to be a player, I think they're going to have to acquire a major studio. We've talked about Lionsgate, Sony, and MGM, among others, that they're going to have to look at. So I think what it's going to do, it's going to add to consolidation from a streaming perspective.
I'm going to put one more question from the listeners in. It says, within the cloud and the food chain, is it worth investing in, and I feel like you've addressed this, the smaller startup companies?
I think you would be remiss not to, because when you think about the cycle, you want exposure to the established large cap, or even names like VMware, Workday, their Salesforce.com. But I think you have to have exposure to a lot of the companies that are just coming into their own and starting to get their sea legs, because those could be the next. Those are small cap today. Those could be the next mid caps.
Right.
Potentially the next squad. And that's why I continue to advocate the barbell approach, not just from a valuation barbell, but even from a cap perspective in terms of ways to play the sector.
Last question. If I said that already, this really is. One more from a guest. What, quote, old economy companies will benefit from the new technologies you've talked about?
Sure. I think there's two. It would probably be IBM. I think IBM and Arvind, the CEO there, I've known. I think that's an example of a company that's had massive challenges. But when you look at cloud and the new management structure, that's one, like, no different than when, when Microsoft and Nadella took over. I'm not saying it's going to have the same trajectory, but I think IBM is an interesting example of one where they have a huge opportunity based on cloud. Old technology company that could have some new sea legs. And I think another example would be like a name like Checkpoint. It's a traditional security player, but I talk about it as cloud continues to shift. That could put some fuel in the engine of a company like that.
Dan, that was amazing. I appreciate the time. To all of my clients and guests, I appreciate you taking the time to join us for an hour review of what we think may be important considerations or merit a place in the portfolio for the next 10 years ahead. Remember, we're not looking for overnight riches, or even if we are, that's not what we're after. We're looking to try to build and grow the portfolio in a way that seems logical, sustainable, and makes sense so that we have legacy wealth transfer and achieving financial goals and objectives. I want to make it clear, we're not trying to make any recommendations in specific to the listeners because I can't see all the people that are on for those that have called in by hard landline, but I welcome a conversation by phone after. Dan, again, it's been a special privilege to have you on. We might like to take an opportunity to do this again, but in the meantime, thanks a ton.
Yeah, thanks to everyone joining. I really appreciate being here.
If anybody has any other questions or wants anything, please email me, jeff.runyon@wedbush.com, and I'll look forward to communicating with you and getting any of your questions for Dan to Dan and anything back. So thanks to you all, and thanks to our tech support on here too. Bye-bye.
Thank you.